The line has been crossed, the barrier breached. The number everyone said was impossible, the number mainstream media called fantasy, the number banks swore would never happen, just appeared on screen. $100 per ounce. Silver broke through. And it did not just touch and pull back. It shattered through and kept climbing. 99.72 this morning. Intraday high already touched 103. The psychological ceiling is gone. And what comes next is not correction. It is acceleration. But this is not just about a number. Not just about silver finally claiming triple-digit status after decades of suppression. This is about what that number represents. It represents collapse of confidence in the United States dollar. It represents death of Federal Reserve credibility. It represents the moment when the world's reserve currency stopped being safe haven and became liability. Because you have to understand what is happening underneath this rally. Silver did not go vertical because of supply deficit. It did not go parabolic because of industrial demand. Those factors are real. Those factors matter. But they have been real for years. The trigger that pushed silver through $100 is the same trigger that pushed gold to 4,941. Same trigger that collapsed dollar index to multi-month lows. The trigger is fear. Fear that the institution controlling dollar value, the Federal Reserve, is no longer independent. Fear that central bank has been compromised. Fear that monetary policy is now a weapon in political war. And that fear became reality 2 weeks ago when Department of Justice served Federal Reserve Chairman Jerome Powell with criminal subpoena. Official reason. Testimony about building renovations. Real reason. Powell refused to cut interest rates as aggressively as White House demanded, and now he is being investigated. Not for economic mismanagement, not for violating law, but for defending independence of institution he leads. Powell responded with video statement. He called investigation political intimidation. He said charges are pretext to undermine Fed independence, and he vowed to continue setting rates based on what serves public, not preferences of president. It was defiant stand, necessary stand, but also declaration of war. War between executive branch and central bank. And when that war becomes public, when separation between money and politics collapses, investors run. They run from bonds, they run from dollar, and they run into only assets that cannot be printed, manipulated, or politicized. Gold, silver, hard assets. Market reaction was immediate. Stock futures fell, treasury yields spiked, dollar index dropped, and precious metals exploded. Gold jumped to new all-time high. Silver surged 7% in single session. That was 2 weeks ago, and rally has not stopped. It has intensified, because fundamental problem has not been solved. Federal Reserve still under attack, investigation still open, and credibility of dollar still bleeding out in real time. This is why silver is at 100, not because of charts, not because of technical breakouts, because currency that silver is priced in is losing trust of world, and when trust disappears, price goes to infinity. Let me show you mechanics of what is happening. Let me show you why this is not bubble, why this is not speculation, why this is rational response to irrational situation. First, dollar in free fall. Not against one currency, against all of them. Dollar index, which measures greenback against basket of 6 major currencies, down nearly 1% this week, trading near 3-month lows and accelerating lower. Why? Because global investors applying political risk premium to U.S. assets. They are looking at DOJ investigating Fed chairman and asking simple question. If central bank not independent, who controls printing press? And if answer is political class, then dollar not store of value. It is political tool. And political tools get devalued to serve political goals. This is sell America trade. We saw it briefly April last year when tariff threats spooked market. We saw it again January when Greenland crisis erupted. But this time different. This time sell off, not driven by policy uncertainty, driven by institutional collapse. Idea that Federal Reserve, most powerful economic institution on planet, could be weaponized by executive branch is so destabilizing, it changes entire risk calculus for holding dollar-denominated assets. And data proves it. U.S. Treasury yields rising. Not because economy strong, not because inflation surging, but because investors demanding higher risk premium to hold U.S. government debt. 10-year yield climbed above 4.2%. That is distress signal. Means bond buyers do not trust issuer. And when bond buyers lose faith, currency collapses. Second, gold leading charge, and silver following with leverage. Gold hit $4,941 per ounce this morning. New record, on track for strongest weekly performance since March 2020. COVID crash. Think about that comparison. Only time gold rallied this hard in recent history was when entire global economy shutting down and central banks printing trillions to prevent depression. Today, economy not shutting down, but central bank under siege, and market treating that as equivalent crisis. Gold is the traditional safe haven. When uncertainty rises, money flows into gold. but silver is the leveraged play. Historically, when gold rallies due to monetary instability, silver outperforms. The gold to silver ratio compresses. Right now, that ratio is sitting around 49 to 1. In normal times, it trades between 60 and 80. In crisis times, it drops to 15 to 1. If gold stays at 4,900 and the ratio compresses to 15, silver goes to $326. That is not speculation. That is math. And the market is pricing in that compression right now. But there is another factor driving silver higher that gold does not have: industrial panic. Silver is not just a monetary metal, it is an industrial metal, and the industrial users are terrified. Tesla, Apple, Samsung, solar manufacturers, electronics companies, they all need silver, and they all see the same data. Supply is gone. The vaults are empty. The Shanghai premium is $10 above New York. The US Mint has paused silver coin sales. The refineries are maxed out. And now the currency they use to buy silver is collapsing. So what do? They panic buy, they stockpile, they lock in supply at any price because the alternative is shutting down production. This dual demand, monetary plus industrial, is what makes silver unique. Gold does not have industrial demand. Copper does not have monetary demand. Silver has both. And when both demand sources activate simultaneously, the price does not go up linearly. It goes exponential. Third, the short squeeze is over, and that is actually bullish. For years, hedge funds made money shorting silver. Every time it rallied, they would fade the move, sell it short, bet on the banks smashing it back down. And they were right. The pattern was reliable. But in 2025, the pattern broke. Silver went vertical. The shorts got destroyed. They lost billions. And now they are gone. The borrow fees for shorting silver have collapsed. Not because there is no demand to short, but because no one is stupid enough to try. The hedge funds looked at the China export ban, the physical shortage, the dollar collapse, and they said, no, we are not stepping in front of this freight train. This removes the resistance. In a normal rally, as price rises, short sellers step in to fade the move. They provide liquidity. They slow the ascent. But when the shorts capitulate, when they leave the market entirely, there is no friction. The price just rises until it finds a natural equilibrium. And right now, with the dollar collapsing and the Fed under attack, that equilibrium is nowhere in sight. Fourth, retail is waking up. For months, silver has been a niche story, a story followed by precious metals, bugs, and macro traders. But $100 is a headline number. It crosses into the mainstream. When CNBC runs a graphic that says silver over 100, when Bloomberg writes an article about triple-digit silver, when your neighbor asks you about it at a barbecue, that is when the general public takes notice. And the general public has trillions of dollars sitting in bank accounts earning nothing. Money market funds, savings accounts, cash, all denominated in a currency that is losing value in real time. If even 1% of that cash decides to rotate into silver, the price does not go to 110 or 120. It goes to 200 because the silver market is tiny. Total above ground investment grade, silver is estimated at around 2 billion ounces. At $100 per ounce, that is a $200 billion market. Apple is worth more than $3 trillion. The entire investable silver market is less than 7% of one company. So when big money shows up, it does not just move the price, it obliterates the price. And the signs are already here. Silver ETFs are seeing inflows. Mining stocks are up 50% in some cases. Retail dealers are reporting delays stretching into February. The US Mint paused sales to reprice inventory. This is not happening because of hype. This is happening because supply is disappearing and demand is spiking. The classic setup for a melt-up. Fifth, the Fed is trapped, and the market knows it. Jerome Powell is in an impossible position. If he cuts interest rates aggressively to appease the White House, he validates the accusation that the Fed is politically compromised. He destroys the credibility of the institution. If he holds rates steady to prove independence, he defies the executive branch and escalates the conflict. He invites more investigations, more subpoenas, more political pressure. There is no winning move. Every path leads to a loss of credibility. And when the central bank loses credibility, the currency loses value. The market is front-running this. Traders are betting that the Fed will eventually be forced to cut rates, not because the economy needs it, but because the political pressure will become unbearable. And when the Fed cuts for political reasons, rather than economic reasons, that is the definition of currency debasement. That is the moment when the dollar stops being a tool of economic stability and becomes a tool of political expediency. And once that threshold is crossed, there is no going back. This is why gold and silver are not pulling back. This is why every dip gets bought instantly. Because the smart money knows that the Fed put, the belief that the central bank will always support the markets, has been replaced by the Fed trap. The belief that the central bank is now a hostage, and hostages do not make good decisions. They make survival decisions. And survival decisions in a monetary crisis always lead to the same place. Print money, debase the currency, inflate away the problem. Sixth, China is watching. And China is buying. Do you think Beijing missed the news about the DOJ investigating Jerome Powell? Do you think they are not paying attention to the collapse of the dollar index? Of course they are watching. And they are drawing conclusions. The conclusion is simple. The United States is in institutional decline. The checks and balances are breaking down. The independence of key institutions is being eroded. And when a country enters that phase, its currency becomes a risk, not a safe haven, a risk. So what is China doing? They are accelerating their de-dollarization strategy. They are buying gold. They are hoarding silver. They are locking down their supply chains. They are preparing for a world where the dollar is not the reserve currency. And they are positioning themselves to be the winners of that transition. The Shanghai silver premium is proof. China is paying $10 more than New York. Why? Because they do not care about the paper price. They care about the physical metal. They know that when the dollar reset happens, when the global monetary system restructures, the entities that hold real assets will have leverage. The entities that hold paper dollars will have nothing. This is the great repricing. This is the moment when decades of monetary suppression, currency manipulation, and financial engineering come undone. Silver at 100 is not the top. It is the signal that the top is gone, that the old rules no longer apply, that the game has changed. And here is the final piece, the piece that ties everything together. The reason why 100 is just the beginning. The Federal Reserve printed $5 trillion during COVID, $5 trillion. And the dollar held up. Why? Because the world believed the Fed was competent, that the Fed was independent, that the Fed would do whatever it takes to maintain stability. That belief created demand for dollars, demand for dollar-denominated assets, and that demand absorbed the inflation. But now that belief is cracking. The world is watching the DOJ investigate the Fed chairman. They are watching Treasury yields spike. They are watching the dollar index collapse. And they are asking themselves, do we still trust this system? Do we still believe the Fed is independent? Do we still want to hold trillions of dollars in reserves? And the answer, increasingly, is no. The world is losing faith. Not quickly, not all at once, but steadily, relentlessly. And when faith in a currency dies, the price of everything priced in that currency goes to infinity. Not because things are getting more valuable, but because the measuring stick is shrinking. This is why silver is at 100. This is why gold is at 5,000. This is why the rally is accelerating instead of decelerating. The market is not speculating. The market is escaping from a currency that is controlled by a central bank that is under attack, escaping from a system that is eating itself. And once the escape begins, it does not stop until the system resets, until a new equilibrium is found, until the dollar is repriced at a level that reflects its true diminished status. That level is not here yet, not at 100, not at 150. The repricing has just started, and it will continue until the institutions stabilize, until the Fed regains independence, until the political war ends. But none of those things are happening. The investigation is ongoing. The dollar is falling, and silver is rising. 100 is not a top. It is a milestone, a psychological break, a signal that the old world is dead and the new world is being born. And in the new world, hard assets rule. Paper promises burn. And the entities that saw this coming, that positioned early, that held through the volatility, will inherit the wealth that transfers from the paper holders to the asset holders. The barrier is broken. The ceiling is gone. And what comes next is not a correction. It is a moonshot.